Hi, Assalamualaikum. My name is Nurul Amira. Today, my group will present about the inventory and warehousing cycle. Before that, let me introduce my group members. First is Shibratul Hanan, second is Khairul Anwar, and third is Fadili Hakim.
Before we go to the assertion in the inventory and warehousing cycle, let me explain the introduction of our topic today. So, inventory and warehousing is a unit because it is a relationship to the other cycle and to provide assurance that the financial statement fairly account for raw material, work in process, finished goods inventory, and cost of goods sold. We know that inventory and warehousing cycle is between the purchase cycle and sales cycle. The inventory and warehousing cycles is divided into 5 activities, which is acquired and record raw material, labor, and overhead, internally transfer asset and cost, ship goods and record revenue and cost, physically observe inventory, and lastly is price and compile inventory.
So guys, this is a management session related to the inventory and warehousing cycle. Let's take a look at all this session.
Hi, my name is Khairul and we are going to discuss the first management assertion in inventory and warehousing cycle. It is existence. The objective of existence is to check whether inventory as recorded on text are exist. Next, the class of transaction and relevant account or ledger are raw material account, direct labor account, manufacturing account, finished goods account, purchase account, payable account, and inventory account. The internal control in existence are: first, proper segregation of duties and physical safeguards the inventory. It is to prevent fictitious inventory. And second, use pre-numbered and properly approved receiving report and material requisition for inventory transfer. Test of control. The auditor need to examine all related documents and do observation on the inventory. Next is substantive test. Test of details of transaction is used to examine the inventory at the end of the accounting dates to be audited. The auditor observes whether the movement of the inventory takes place during the count. Audit evidence for existence are receiving report, vendor's invoice, requisition purchase, and purchase order. And lastly, possible misstatement. Possible misstatements related to existence are unrecorded inventory and potential of inventory become obsolescence. Second management assertion are completeness. The objective of completeness are to check whether all inventory are recorded completely and existing inventory is counted and tagged, and tags are accounted for to make sure none are missing. The class of transaction and relevant account are raw material account, direct labor account, manufacturing account, finished goods account, payable account, and receivable account. Next, internal control. All administrative expenses incurred during a given year must be recorded, and all amount owed to brokers for securities purchase must be included in liabilities. Test of control for completeness is the auditor need to examine the inventory to make sure it is tagged. The auditor need to inquire account of all used and unused tags to make sure none are missing or intentionally omitted. For substantive tests, the auditor need to test of details of transaction is used to examine the inventory at the end of accounting dates to be audited. The audit evidence for completeness are receiving report, requisition purchase, vendor's invoice, purchase order, cost of accounting record, and perpetual inventory master file. And lastly, the possible misstatement in completeness are financial statement, inventory, cost of goods sold, and the unit cost may be over or understated.
Assalamualaikum warahmatullahi wabarakatuh. My name is Shibratul Hanan and I'm going to discuss on the net assertion accuracy. The objective is to make sure the inventory is being counted accurately. The class of transactions related to accuracy are amounts and inventory transaction related data and events have been recorded correctly. Secondly, disclosures have been properly measured and explained. Meanwhile, the relevant accounts are stock issue confirmation, stock transfer receipt, and raw material perpetual to master file. In addition, the internal control is cost accumulation. Standard cost and variance reports must be reviewed by a person of appropriate level. The company also must follow accounting standards and BR accounting policies. Next test of control is as beside, and it is being made to make sure that the transactions are free from error, especially the amount of inventory from the balance sheet to the income statement as cost of goods sold. The last part in accuracy is we are going to discuss substantive tests, audit evidence, and possible misstatement. The first substantive test is recounting the client's counts to make sure the recorded counts are accurate on the text. Then compare physical counts with perpetual inventory records. And lastly, record client's counts for subsequent testing. Next, the evidence we need are reconciliation of the documents and perpetual inventory master files. The misstatements stated beside are usually caused by over or understate of the unit and wrongly recorded from the beginning. Moreover, the next assertion is classification. The objective is to check whether all inventories are correctly classified by the management. The class of transactions related to classification is inventory transactions and events have been recorded in the correct account. Meanwhile, the relevant accounts are vendor's invoice, stock issue confirmation, and stock transfer issue. The internal control is raw material requisition and finished good perpetual inventory master file are used to classify inventory into raw materials, work in progress, and finished goods. Furthermore, test of control to test the effectiveness of the internal control is to check whether the classification of inventory is in compliance with accounting standards and company accounting policies. The other substantive tests we need to do are examining inventory description on the text and compare with the actual inventory for raw materials, work in progress, and finished goods. Lastly, the last part in classification are audit evidence and possible misstatement. The evidence we need are the vendor's invoice, cost, accounting records, and raw materials receipt schedule. The misstatement that probably happened is inventory being wrongly classified from the beginning.
So, right and obligation. For the audit objective is to check whether all the management has right and obligation to the inventory recorded. Next is class of transaction, which is purchase account, payable account, requisition account, vendor account, and lastly is costing inventory record. The proposed internal control in place to secure the assertion of right and obligation, which is an investment should not be reported as an asset unless it is owned by client, and liability should be reported only if they represent an actual obligation of an assurance of the company or other entity. Next is test to ensure the effectiveness of the internal control or the inventory held at the third party are included, while the inventory held on the consignment are excluded. Next, how to test the effectiveness of the internal control. To test the effectiveness of the internal control, we need to review the board minute for the evidence for the legal right of the inventory. Next is the substantive test, which is to achieve the audit objectives, which is we need to review the entity procedure for consignment inventory. There are three audit evidence that are related to the substantive test, which is vendor invoice, cost of accounting report, and perpetual inventory master file. Lastly is possible misstatements. is overstatements or understatements, the inventory and the cost of goods sold. Next is a realizable value. The objective of this assertion is to check whether there are inventories are obsolete and unusable. The class of the transaction is requisition document and account payable. The proposed internal control is first, inventory management, personal review inventory for obsolete, slow-moving or excess quantities. And the second is procedure or annual comparison of goods on hand with perpetual inventory record. Next is test of control to test the effectiveness of the internal control. First, the test for obsolete inventory by inquiry of factory and employees and management. Second is discussed with management and test procedures for identified obsolete and slow-moving items. And lastly is to review inventory items, and it must be presented at fair value in the financial statement. For the substantive task to achieve the audit objective, first, we need to identify the quantity of the damaged goods. Second is alertness for items that are damaged, rust or dust covered or located in inappropriate places. For the audit evidence that are related to the substantive task is first, raw material perpetual inventory master file. Second is cost of accounting report, and lastly is physical inventory. The possible misstatement of this assertion is misstatements or recording the obsolete and unusable inventory items.
Assalamualaikum. My name is Fadil Hakim and I am going to discuss the next assertion, which is cut-off. The audit objective for cut-off is to check whether the sales and inventory purchases are recorded in the proper period. Next, there are 8 classes of transaction and relevant account, which is related to the cut-off. The first one is raw material account, direct labor account, manufacturing account, finished good account, payable account, receivable account, inventory account, and lastly, purchase account. Next is internal control. The management has to record transaction date as soon as possible after goods and services have been received and follow the current accounting period. And employer contribution for the year have been properly recorded, even if received in the subsequent year. Next is test of control. The management need to examine procedure manual and observe whether unrecorded vendors invoices exist on inventory. Next is substantive test. They also need to compare dates of receiving reports and vendors invoices with the dates in the acquisition journal. Next is audit evidence related to substantive tests, which are costs of accounting period and perpetual inventory master file. The last one is the possible misstatement. The possible misstatement for cut-off can be improper sales and inventory purchases and unrecorded inventory. Next, detailed tie-in. This is where the auditor responsible to check whether inventory that recorded the management is agree with the total amount in the general ledger. The class of transaction and relevant account that is related with this assertion is vendor invoice, costing inventories record, stock confirmation issue, stock transfer issue, stock transfer receipt, and stock requisition. In order to achieve this assertion, the management has to do some control which are follow the inventory listing schedule for raw material, work in process, and finished good in the account balance that agrees with the total. Next, the management also might ensure that their account or recorded of shipment and the receipt that is printed during their physical counts of their inventory. For auditor, in order to achieve their objective, they must perform a compilation test of control to check whether the total inventory agrees with the general ledger of the management, and they also must perform substantive tests where they investigate the inventory listing schedule and compare it with the actual in the general ledger to detect error. The audit evidence related to the substantive test are physical inventory purchase input, stock requisition, vendor invoice, and inventory schedule. Lastly, for this association, the possible misstatement may be understatement or overstatement of inventory and cost of goods sold.